Definitely, we've been surprised by the resistance of the US economy recently. We had very bad news during the spring, and since then we have had some better indicators, not very strong, but better. It was a surprise. We still think that the US economy is very fragile. There are many indicators showing that. For example, the federal deficit, which is very high, the fact that the saving rate is too low for consumers, and there are many other indicators showing the weakness of the economy. So we think that the recession maybe is not coming as soon as what we thought, but we still think it's coming.
As regards inflation, it's true that there have been a lot of progress, especially when you look at global inflation, but core inflation remains too high for the central bank, and we think that it will constrain the ability of the Fed to support growth in the next few months. During winter, we were worried about the risk of an energy crisis, especially with gas. It did not happen. And so we had a big improvement in confidence in economic indicators. But over the last few months, those indicators have fallen quite significantly and now point to a contraction in GDP. Why? Because monetary tightening is starting to impact economic activity, and we think that we'll see more of it over the next few months, especially as households have suffered a bigger purchasing power shock than US households, and investment will probably suffer from the increase in interest rates. As regards inflation, we had some progress, but when you look at wages, indicators are starting to fall but remain way too high to provide some comfort to the central bank that inflation is going back to its targets.
We think that the situation in the residential sector in China is really concerning. Probably it's not enough to trigger an economic crisis, but what we have seen recently is that the Chinese economy is much weaker than what we thought. We thought that after the zero COVID policy, they would accelerate very strongly. Growth would accelerate as it happened in Europe or in the US, for example, and it hasn't been the case. It has been the case only for 1 month, I think, and after that the economy weakened again. I think this is the main issue, is the fact that this residential problem is happening at a time when the Chinese economy is already very weak. We think that we're going to have a recession, so definitely we do not like risky assets. So we think investors should avoid equities, they should avoid high yield, financial subordinated debt. They should try to be, if they can, to be long modified duration, to take advantage of a probably decline in interest rate that we should have in the future. And so this is a very cautious asset allocation that we favor today for at least the next few quarters.
We started the year with a significant underweight on equities and high beta credit, and a negative modified duration to benefit from rising interest rates. At some point during the year, we decided that the likelihood of a recession had increased significantly, so we increased back modified duration towards the benchmark level, and after that, we increased further modified duration to prepare the portfolio for a recession.
In Lazard Patrimoine, we have the same asset allocation for a while, which is that we are short risky assets, including high yield, for example. What we changed over the last few months was the fact that we were neutral modified duration, and now we are long modified duration. And we also added a new position very recently, the fact that we are long yen against the dollar, because the yen is very, very low, and we think it's too much. Probably at some point we will have a surprise because the inflation is accelerating in Japan, so probably the central bank will have to raise rates, and so it will support the yen against the dollar. And so we thought it made sense to add this position. It's not a strategic position, but we like to add some small diversifying position in the fund to try to boost the performance.